Epstein of Linn Associates with your morning flash update. And this update is for Friday, the 10th of June, 2022, 8:30 a.m. Central Time. Well, as you can see, the stock market plunging, down 500 points in the Dow, 70 points in the S&P. The only good news, as I see, is it's down so much on the opening that I seriously doubt that it'll stay down this much by the close. That's just my guess. But you're saying, hey, if it's going to accelerate from here, is it going down 1,000 points today? I don't think so. The dollar's surging, too much for the metal markets. They're down. In addition, in copper, more bad news out of Shanghai. They're looking more and more as though this thing can go into another shutdown. Yeah, I hate to say it, but that's the word this morning, that if they're discovering more cases, they might have to shut down again. That'll put it down. When is America and the world going to learn you've got to get away from China as a supply chainer? Why? Because they're the craziest thing. Today, Beijing's ordering more hospital and emergency facilities, longer-term ones. Why? They're going to stay with the zero COVID policy. I thought they'd get smart enough and say that's not going to be what they stick with. Not looking that way when they place that type of order. The market's paying attention to it. Look at how they're hurting all the currency markets except the yen, which is getting a bid because the Japanese government has woken up and said, maybe it's fallen too far and we should do something. I don't know what they can do. Down hard or not so hard in the grain markets, bonds and notes. The news today, the CPI, and we'll get to that in a minute, weighing on it. An early correction in the energies. Do I think it's a real change? No. I think you've just got to be careful and understand the craziness in the natural gas over the next 10 days or so that you're going to get, as we have to get more information on when that facility in Texas actually gets itself up and going after the explosion that held it back. But the early read on the CPI is the problem for the market. And here's what it was. When you come to it, the CPI number up 1% to 7%. Wow, that is not what the market was looking for. Now, ex-food and energy, the core, this is an important number, up 0.6. They expected it up 5. Prior was 6, so it's running right there. Energy prices, we know they're soaring. Prior month was down 2.7. This time they're up 3.9. Food prices, prior was up 0.9. This time they're up 1.2. Consumer price year over year, 8.6. They expected 8.3, so this is a hotter read than the market had. And May core ex-food and energy up 6%. They expected 5.9. The prior was 6.2. What the market will hang its hat on, whether right or wrong, is the core number, because that takes out the month-to-month, some of the gyration. And they'll say, okay, it's up, but it's moderating. It's not as high as it was before. What nobody's talking about here, and you have to go further into the numbers, is wages are not keeping up with inflation. That's first thing. Number two, this type of hot reading puts another foot into the September period where the market's going to look at another 50 basis point hike. This number is not going to get the Fed to sit back and say, oh, well, let's wait and see. This will cause more and more arguments that there should be 3 50 basis point hikes. At 9, we're going to get the University of Michigan preliminary consumer sentiment numbers. They're looking for 58.5 compared to 58.4 before. I don't know how they'd feel after the CPI number. Treasury's going to release their May receipts and outlays. Canada added 39,000 jobs in May. That's much higher than the expectations for 25,000. And it puts their jobless rate down to 5.1 in May versus 5.2 in April. It's got to be like a 20-year low or something, I would think. So that is one of the areas that you look at. So when I'm looking at all this, I'm trying to figure out what the heck you can do to work with everything. And that becomes the hardest thing of all. So as I'm looking at this, here's what I think. I think you go at this point in time and you take a look at our futures trading kit to get an idea as to what does number one, like in core CPI, what does this all mean? What is the Fed going to look at the M1, M2, and M3? In other words, they've got to look at the money supply. The Fed's got to look and say, hey, we got to do one thing. We've got to start tightening. We got to shut off a lot of this demand. But they have to avoid a recession. That is going to be the hardest trick in the world. So that's where this cause and effect sheet comes up, and it's part of the trading kit. It is important. It's something you want to look at. Then my pivot point videos, we get a lot of response on this. It's all part in there. So's the Aruna indicator. 14 different chart patterns. It's a PDF download. Print it out. Keep it by your desk. I think you'll find it interesting. And then we're always updating with the CME group to give you what? To give you the latest of their reports. So you put this in, you learn key economic events, what is going on. It's all free, folks. It's one download. It's the simplest thing you've seen. Just go to our website under free offers, or you can click right here with your cursor, come up, follow my finger, go to the top there, and you'll be able to work with it. You'll see an icon, just give it a click from there. Remember what I said, though, as we get to the markets. You're looking at the early big declines. Other than a short covering going into the weekend, I can see that. I don't think you're going to accelerate to an 800-900 point decline today. I think a lot of this was in the market in the sense that the market was saying to itself, what if the number's hotter? I was talking about that, pointing it out to you all week. But it's been a hard week of trading because even the currencies, my favorites, they got set back a little bit. Okay, you start over. It's that simple. No big damage. I'm Ira Epstein. You have a great weekend. You will see me. I will be putting out the weekly updates. I'll try to get them out either today or tomorrow for you. And we'll cover the weekly charts right here as well. Take care. See you then.